Hello, everybody. Good morning and welcome to another episode. I can already see some familiar faces here in our audience. Nice to have everybody here and welcome to another quarter. Again, my name is Grace Effiom and I am your host. And today I have a guest with me. I'll just give him like about a few minutes to just introduce himself. So I have Olagoke joining us this time around, and this is because of his specialty in topics that has made a lot of people reach out to me. So Olagoke, please, the floor is yours. Just a brief introduction, and then we can take the conversation from there.
All right, thank you, Grace. Hi, everyone. My name is Olagoke Kuye. I am a partner at Aluko Oyebode. I work at the business advisory unit, and as part of the things that we do include, providing advisory services to different clients in various sectors, including in the fintech space that will also cover, some of the things that we're going to be talking about today. And it's really nice to be here. Thank you, Grace.
Thank you so much, and thank you for coming. So we're going to just go through the rules for the session. You won't be able to comment because of the restriction. If you have a question, just drop it in the Q&A session. We will take all the questions during the session as well. Just drop your questions and we will get to them. For today, we are starting with an introduction, and the aim of this webinar is just to explain and talk through the new FCCPC rules. A lot of lenders have reached out to me. They've shared their concerns, they've shared their frustration, and we just thought that it would be nice for this particular quarter to cater around these. Just compare what the previous regulatory approach had and what we have now. In addition to that, what is the obligation you have as a lender or a partner or even a vendor? And then how do you stay compliant with all of this? And then we also have Goke share more experience and insight as to the FCCPC rules, and we take the questions that anyone has on the call, and then we can just proceed from there. So we all know that FCCPC has dropped another regulation. I can remember the first time when the first one dropped, there were so much questions around how do we want to manage this? Who would be the lead person to reach out to? Should you have questions as well? And at that time, the lot of lenders I'll say they didn't really scatter around to figure out how to be compliant, because it only legit affected lenders who wanted to push their applications to stall. And it was a whole lot. At first, everyone was struggling. FCCPC had tons of application at the same time. They could lenders couldn't get their applications to store. We have some people that wanted to go mobile, decide to say, do you know what? I'm just going to stick with the web, since Apple and Play Store are now enforcing this. So a lot of lenders didn't pick this up since they weren't going to stores, mobile, the Google and the Apple Play stores. And most people that picked this up are those that knew they needed a mobile application. Now it's coming to bite everybody. Even if you're a provider, even if you're a vendor, you're also being affected by this new rule. So we're just going to talk about why this regulation. Over the last 5 years, we've had a lot of complaints from customers where you hear someone saying, I'm just sitting down here randomly and a strange person is reaching out to me, threatening me that, oh, if you know this person, you're going to person to repay my loan, or they're going to be killed. A lot of threatening messages come in. I even got one for a random mechanic that I had worked with a couple of years ago. And then I'm just getting this SMS telling me how the person is owing. And it was as if they pulled all of these people's contacts and then they were posting their face on social media and all of that. These grew a lot of awareness and borrowers started complaining. And that was how FCC came in place to put a restriction to this. Now, most of the people that had done this, which were we call them the Chinese application, rather. Some of them are now either have gone, have become compliant, have merged, and the rest of them, or even found ways to launch those applications without having to go to store. So they'll either host it on a web page where what they can download the SDK and still take. 'Cause. 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 'C which they released. And then they decided to bring in a new one. And this time around, it came for everybody. Everybody has to be compliant. It's not about whether you're going to be pushing your application to store or not. As long as you're a lender, it even goes as far as covering the big banks, microfinance banks who already have CBN license, which shouldn't be, because in the first instance, if you had a CBN license, your CBN license will cover for it. You don't have to do FCCPC registration, but now it's almost like they have to take permission or get an approval to show that they are not supposed to be in this yet. So we're just going to ask a few questions. We're just going to go through what this new regulation means and how it's affecting lenders, so to say, in this instance, and what they can do to ensure that they are compliant. Okay. So, okay, the first question to you: how prepared do you think FCCPC is to actually enforce this regulation? I mean, for the first bits of it, a lot of lenders did face a major challenge where they will submit application and they are reaching out for months. Nobody's answering them. They had to even pay on top of the registration fee. They had to pay more money to get someone to even read their email and review their application. So how do you think they're prepared for this particular policy that they've released now and all of it?
Thank you, Grace. I think the jury is out on how the FCCPC will manage this process, given that it's just been released. I mean, you rightly mentioned what happened when they released the limited guidelines in 2022 and how there were backlogs of applications and all of that. The new regulations has actually layered on the limited guidelines as you had it in the past, which is the past regime. And the new regulations has layers of documentation and processes involved in it. Now, it will work for both, it would impact both the FCCPC as well as stakeholders or participants who are covered under the regulations, right? So, participants would also, try to go through the documentation process and the requirements, and all of the processes required for, registering with the FCCPC. The FCCPC would also, ordinarily grapple with some of these things. I would assume that the FCCPC would have taken some learnings from what happened, in 2022 when the initial limited guidelines were released, to make provisions for how it's going to implement the regulations, given the fact that you have layers of documentation and processes involved. One of them will be the data protection compliance requirements. There are reports that you need to submit and file with the NDPC. The FCCPC is requesting for those reports as well. There are concerns around, your partners and what it is that you signed with them and your arrangements with them, and you're now required to go to the FCCPC for approvals for those contractual arrangements. And if you're going to review or revise those contractual arrangements, you also need to go back to the FCCPC for approval. And then there's a timeline requirement. So existing players have a 90 day window to ensure compliance with the regulation. So they have to start putting their documentation together and ensure that all of the things that they require to register with the FCCPC are in place. Now, if all of the participants or the lenders and service providers, as it were, because it's not just the lenders that will be registering, service providers as well, collaborators, vendors, which is another conversation. Hopefully we'll get to it in the course of the webinar. Everybody is not going to be front-loading documents to the FCCPC. And the timeline for FCCPC's approval is 30 days, right, under the regulations. Can they do that in 30 days? The question is, well, we don't know yet. It's a new regulation. We'll see how that plays out. There is, some laxity for the FCCPC under the regulations. So at its discretion, extend the timeline for which or within which it would grant such approvals. And I think that that's what they're going to be playing on largely. So you have a 30-day period, but if we can't respond to you in 30 days, you can extend the guideline. Now, very quickly, maybe I would say if you look, there's an act that we call the Business Facilitation Act, right? Says if an NDA has a time within which it's supposed to grant a permit or a license, registration as it were, and that time elapses, there's a deemed approval, right? I'm not sure you want to interpret. I'm not sure you'll be able to bring that into this context. Maybe you can, right? But the thing is, the regulation says that you will not be able to carry out any operation or business until you've gotten the approval of the FCCPC. So if you don't want to hide under the deemed approval, which is not provided for under the regulations, the FCCPC will probably come after you. Now, do you have the appetite to start, going to courts to see enforcing, the provisions of the BFA, the Business Facilitation Act, to say you have a 30-day period, you haven't come back to me, and I'm deeming approval? Those are issues that we see, or that we think, will sort of come to play as the regulations are implemented. But well, where we are, and we're hoping that the FCCPC has taken some learnings from all of the issues that were in play under the old regime, and would implement that to ensure that the regulations are properly implemented.
Okay, thank you so much for that insight. So we are hoping that they are well prepared this time around, and fingers crossed. So the only feedback we will be able to get would be from the people that now apply and the rest of it. Back to the regulatory, let's just go back to the first one, that was the first set of regulatory that we released. Do you know of anybody that actually did a renewal after their first registration? Just a quick question there.
Honest response, no. Some of them, persons that I'm aware of tried it, but given the issues with the initial registration, you didn't have the same verve, with which they did the initial registration for the renewal. And there were just conversations around it as to whether or not they saw it through. I'm not aware. We never had that follow-up conversation. But short answer to your question. I'm not sure a renewal, went through, or I'm not aware of a renewal that went through under the old guidelines.
All right. The idea was for this regulation to come and help consumer credits, improve the quality of borrowers' data, maintain privacy, and ensure that the borrowers in this instance are protected. Do you see that happening? We're just asking questions with regards to the previous one. Do you think it did happen? And do you think that this new regulations would even improve if it did?
Grace, my apologies. I would ask you to ask the question again. There was some glitch on my end. If you could do that again, please.
Okay. So the reason for the regulation was to improve borrowers' conversation. It was to improve the quality of data, improve the privacy of borrowers, restrict lenders from abusing their privileges. Yes, you've asked me for my details, but don't use those details and abuse it, right? Do you see this policy now improving all of this, or do you think it has for the previous one? And then for the subsequent one, what do you think would improve following the new regulations?
With respect to data privacy and protection under the guidelines, the previous guidelines, it sort of introduced data protection, right? As part of the documentation, it asked for certain documentation that you would ordinarily have been required to file with the NDPC, right? Mm-hmm. Your reports and all of that. The forms as you had it under the guidelines have also been adopted under the regulations. So it introduced some form of data protection under the former guidelines. But are they as robust as we have it under the new regulations? The answer is no. So the new regulations is built on what the guidelines provided for or introduced at the time. And part of the things that the regulations has also provided for now is ensure that you respect consumer preferences, ensure that they are able to control whether they receive unsolicited advertisements or not, ensure that you're largely in compliance with the NDPA. Part of the requirements under the NDPA includes, hiring a data protection officer, filing all of your compliance audit reports and, your data impact assessment reports, ensuring that you procure your, audit trust mark, and all of those things. So yes, I think the new regulations is built on what you had in the past, right? By providing for, more in terms of how consumers or borrowers can be protected. Now, under the old, guidelines, part of the questions that you would need to answer for the purpose of, carrying out, digital lending was, confirm that your apps would not require access to my call log, my, my gallery, the people on my phone, and all of those things, right? Like I said earlier, we imported, or the CCPC imported the requirements under the guidelines, which is largely a form. They just brought the form into schedules in the regulations, but then just layered on it by saying that what, all of the other compliance requirements under the NDPA, please ensure you comply with those things, and provide evidence that you've complied with those things. In addition to ensuring that consumers can actually decide how they receive, information from you, how they receive unsolicited advertisements from you, their preferences are selected, must be respected, and also, data privacy issues, comply with.
Thank you so much for that. I know because for this process, we had to work with a couple of lenders to just see, get them to be able to put their information and the details they needed together. So yeah, in the NDPR audit, you're seeing them asking them, oh, what data are you getting from your borrowers? What information do you need from them? What are you using this information from them? What are they even go as far as asking them questions around their delete policies, right? If a customer comes and says they're deleting the application, what information is taken off, what information is being kept, if you seek content and consent for every access you ask the customers. And there's a whole lot of questionnaires that goes into that bit and tells them what they're supposed to do and how they are to go about it. So yeah, so I do see I think because we were much more involved in the process and just helping some of the customers to be able to meet up with the expectation, we could really see the intention behind asking deliberate questions around protecting the borrower. So yeah, I'll say kudos on that bit and making everything compliant. So now this enforcement has come in to stay, and the focus has been on the digital lenders mostly. How do you see this being enforced for, let's say, a typical lender that is probably giving out loans in the market square, right? They're giving out loans in the market, those ones that just come in and they're doing one-on-one, or you borrow from me, you pay tomorrow. Do you see all of this applying to them? How do you see it covering, or are they going to be exempted? Yeah.
I think the scope of application of the regulations is sort of clear. As long as you're carrying out digital lending, right? Or your lending is, electronic based, or is online, or is more traditional, you will come within the ambit of the regulations, right? I think the only way you probably will not come within the, ambit of the regulations of if you're not, whether digital, or electronic, or online. So online would, would also include, web-based. So yeah, I'm not an app, but I'm online. By virtue of the regulations, you will ordinarily be covered, except where your lending does not include any of these things, right? And again, maybe the FCCPC should also clarify what non-traditional lending is, because you might have a situation where the FCCPC probably comes after you and says, well, it also says non-traditional lending, right? I think, certain, terms in the regulations, maybe in the iteration of the regulation or, a revision of it should, be somewhat, clearer, so that those that are supposed to be covered under it are well aware ahead of time. But as long as you're digital, you're online, you are, web-based, you are whatever it is, within the ambit of the regulations as provided that you will be covered, right? And in addition to that, not just those guys who are digital, who are electronic, who are online, their service providers, their vendors, their collaborators, as long as you enjoy a benefit from the lending transaction, you will also come with the regulation.
Yeah, thank you for that. And speaking towards the online lenders, I mean, compliance is going to be easier for like the bigger lenders, like the ones that have like resources. But when it comes to the smaller guys, they will struggle, right, in being able to be compliant because of the cost of it and the requirements and putting together some of the documentations and the rest of them. What do you think is the biggest compliance gap that you see today among lenders?
Let me go back a little bit to clarify, the response on the digital, electronic, online. And I think that's important because under the old guidelines, there was really no clarity as you had it under the new regulations with respect to whether financial institutions or a bank or microfinance bank, because microfinance banks, right, will typically, carry out also digital lending activities. Under the guidelines, you didn't have that clarity. The new regulations has then said, look, lenders as you have it, right, which would include your digital guys, your web-based guys, your online guys, and all of those things. Yes, they are going to be covered, but as long as you are a bank, which would include a microfinance bank, or a financial institution regulated or licensed by the CBN, you're exempted. I mean, the definition of lenders and lenders under the regulation actually clarifies that. So in a way, I think it puts to rest that issue. I just wanted to clarify that your digital lender, online guys, your web guys, as long as they're providing credits, facilities, unsecured loans, right, and are not regulated by the CBN, will come within that ambit. Now, to the question whether small lenders will be impacted, I think yes, they might be impacted. I don't want to say they will be. I don't want to be categorical. They might be impacted. Now, and that's because industry statistics suggest that 7% of operating cost, there's 7% operating cost for in the lending space, right? The digital lending space. If you then layer on, some of the compliance requirements under the regulations, it might push up that cost, right? So I'll give you instances. You have data protection, which is a very serious issue because, think about it. All of these rules, regulations, for the digital lending space actually came about because largely people's data were compromised, were breached, and all of those. You breach the terms of a loan. I call your uncle, I call your auntie, I call your classmates, I report them to you. I have access to that information. There really was no, regulation around how you can use the data of your borrowers or your customers, right? Now, these regulations have then introduced have introduced data protection in a more, serious manner. So data protection is actually a major metric, right, in this compliance requirements issues that we're talking about. You have the obligation to hire a DPO. It comes at a cost. Even if the person was going to be in-house, there's the cost in terms of the manpower, right? If you're outsourcing that service, you're going to be paying a service provider to provide that or carry that obligation for you. There are filing costs for the NDPC. They're going to pay all of those things, which you then show to the FCCPC that, look, I have complied with respect to, data. There are security issues around your apps. It comes at a cost as well, right? Because you're also, required to ensure that, the information of, consumers on your platform are actually protected, right? Now, let's come to the compliance, costs under the FCCPC. You have your application fee, you have the approval fee, and all of those things. So yes, it would increase the cost, right? And it might impact small lenders. But the flip is, if you do not comply, it's going to be worse, right? So I think for small, yes, it might impact their operations, but if, they actually then revise their operational, structure, they might have a way around it, right? This will largely go to, how you then, structure, all of your operations, maybe make it leaner, but be heavy on, compliance, ensure that compliance, is not impacted. But I think, yes, it might impact them, a few of them in the short term. But the flip is, if you do not comply, the risks are higher, and the costs are steeper, right? And I think it also, opens up, collaborations or, as it were, major opportunities, or acquisition opportunities. I may not be able to comply with some of these things. I can't continue to play because there are serious, non-compliance risks and that I don't want to carry on. But there's somebody down the road who's willing to, collaborate with me, or for us to, merge or whatever it is, and then, we consolidate, operating costs just to ensure that, we remain in business. I think it also opens, opportunities for that.
Thank you. So we've spoken about the disadvantage of them not being compliant, right? Are there actually opportunities for lenders that take this seriously and then go early, do their registration? Are there any benefits for them in terms of being early and pretty much being able to stay compliant? Do you see any benefits for the lenders in this instance?
Well, first benefit, obvious benefits is if you file your application early, chances are you're going to be attended to early, right? You prevent the rush. Everybody is now, wanting to come in at the same time. You put your documents together. So for those who ordinarily have been compliant, right? Data protection, tick, ensuring that, you do not breach, privacy, tick, you have security around your tick, your ownership, all of those things, all of the documentation requirements, that the FCCPC would require for registration. You have all of those things. Maybe a few, might be out, of the mix at the initial stage because it's a new regulation. But you can very quickly put those things together and beat the 90-day, timeline, and then you submit your application on time. Yeah, you get, the benefit of, being registered with the FCCPC quickly. You beat the rush, and then you stay in business. You don't get to renew again until after 3 years, right? And then renewal is every 3 years. So for the next 3 years, you're home and dry, and then you can continue your business. You just ensure that your periodic compliance requirements, your biannual, reports, your annual reports, and all those things, are filed, when they show the file. That's an obvious advantage, right? Then, other benefits would include, if I'm compliant, I'm attractive to, investors. There's still, inflow of, funding for these players, for players within the sector. So investors, are largely open to and are happy to, do business with entities that are, pretty much compliant. If an investor was going to come in to invest, in the business, they also want to confirm, apart from the financials, how are your legal, right? How is your legal rather? How are your compliance requirements? Are you up to date? Is there anything outstanding? Are there, penalties or fines that I should be aware of? Are there, queries from the regulators and all of those things? If those things are reduced largely to the minimum, there's investment attraction, for those sort of people. Again, it might also, enable such
lenders to better price, their loans, because again, you conduct credit assessments. I mean, the regulations require, conduct a credit assessment, and then you leverage on credit bureaus to ensure I'm providing a loan to this person. This person's credit risk is minimal. I know how to then price, the interest rate and all of those things, and you are clear in the documentation while you are discussing with the borrower. These are the terms of the loan. This is the interest rate methodology. This is how you're going to be paying back, and all of the terms and conditions are clear. I mean, sort of largely again will reduce risk of loan default, right? Because you've properly assessed the person, you've appropriately priced the loan, right, in a way that is beneficial for you. And the point is, it gives you it reflects on your returns if everything is done properly the way it is supposed to be done. So maybe we focus largely on the consumer in relation to the regulations, protecting the consumer. But if you look at it closely, if a lender were to implement the provisions of the regulations properly, it might also have some upside with respect to their returns, in terms of how they provide those loans and their business operations.
Okay, thank you so much for that. I know that for some of the lenders that are already big, they're already putting in the necessary things in place to be able to ensure that they are compliant in this instance, and hopefully that everybody's able to meet up with the deadline. So 90 days, it actually seems 60 to 90 days actually seems very realistic. And if you're getting to renew it in 3 years, then that makes a lot of sense. I mean, for some of these lenders, they are renewing their lending license on a yearly basis. I mean, if you have, even if you renew your license middle of the year, say your license is due, every license is due by December, and then you renew your license May. By December, it still expires, and when you go into the next year, you're counting it from the start, and then you have to. So it makes sense for it to it being 3 years, and the pressure would reduce a bit as against being regularly every year in this instance. So now, do you think them having to cast their nest to meet providers, the regulation just doesn't just stop with lenders? They're saying, oh, even if you're a provider to those that do digital lending or lending, you are expected to also be compliant with FCCPC. This is like casting a very wide net, and I see it almost overwhelming both maybe FCCPC and the lenders. Do you think that is a very realistic scope that they are covering in this instance, making it reach the providers as well?
I think there's going to be an implementation challenge for the FCCPC. That's the first thing. Lenders on one hand will need to comply, and there are tons of lenders. Now you've expanded the scope to cover service providers, to cover vendors, to cover partners, to cover collaborators. Now, there is a test. As long as you get a benefit from the transaction as a collaborator, a partner, a service provider, or a vendor, you're required to register with the FCCPC. I think the FCCPC needs to clarify a few things, right? And I think one of those things in relation to this particular question would be the definition of what benefits would be. Because it's clear that, I mean, for a debt collection agent, for instance, you're probably going to be getting your fees from whatever it is you collect in relation to the loan in the event of a default by a borrower. So they can very easily say you're deriving a benefit from that transaction. The other part is typically you factor in the cost of the loan, right, into the loan or into the amount that the borrower is going to repay. Part of that will include credit assessment. Now, for those that are involved in the credit assessment process, by the literal wording of the regulations in this instance, it would seem to cover them, right? So, say for instance, a lawyer was involved in the process, right? And his fees is just a one-off, right? Are we then going to pull that service provider into, these requirements to register with the FCCPC? Because that argument can be made, right? A service provider to a lender, a vendor to a lender. I think the scope is too wide. And I think it's one of the things that the FCCPC needs to review. At the very minimum, maybe define what benefits will be, because there is that benefit language on the test, in relation to that particular scope. As long as you derive a benefit from the transaction, as a service provider, collaborator, vendor, etc., as it were, you will need to register. So I think those are the things I'm going to point out to say might need a bit of rework, right, in relation to that particular issue. For the first one, because you have a wider net, maybe the FCCPC needs to ramp up, its capacity to be able to handle those registrations, and not just the registrations. You also have ongoing compliance requirements, right? So capacity to handle registration, capacity to handle ongoing compliance requirements, and the second one, which I think is really, really important, can we sort of narrow the scope of those that we would refer to as service providers, vendors, and all of those things, right? By maybe honing in on, what benefits will look like for the purpose of bringing them within the purview of the regulations. Those are the things that jump to me or come to my relation to that.
Yeah, because it's almost like if we're to just cast the net in all providers to digital to anyone giving a lender, right? I mean, we have if you pick, for instance, I'm just going to use a typical scenario of building an application. You have an SMS provider. Are you saying the SMS providers as well are going to be? Yeah. Beyond the SMS providers, you also have the SMS providers are even powered by the telcos as well. You have the people that you're getting verification from, whether you're using NIBS for your direct debit, whether you're using Remitter for your direct debit and all of that. Do they have to now do FCCPC? All of them fall into it. You have Monify and different payment providers that are also playing in this space. So do they now have to go and get FCCPC registration? And what do they even have in place to be able to accept all of those applications and review them within 30 to 60 days, like they've mentioned, right? All of this need to come into consideration. Hopefully, I know usually when rules and regulations are released, there's usually another updated one. I feel like there's going to be an extension first. I'm just hoping, because of the rush now, a lot of lenders are now applying. Everybody's just trying to get things done, and that's just going to create a very huge backlogs for them. And like you mentioned, we don't know if they have the resources in place to be able to handle that much people applying for to get their license at the same time. So yes, please continue.
Maybe I should say we're probably going to see quite a number of clarifications to the FCCPC in relation to the regulations. Letters to them, asking, please, what do you mean by this? Would I be covered? Am I captured in the definition of your lender or service provider? And a whole lot of explaining to do, right? It's not unusual to interface with regulators. I mean, we do that, where, the need arises, for and on behalf of clients, just to better understand what, the provision in a law or regulation is saying, even for the old ones that seem to be clear. From time to time, we still have situations where we don't have to write to the regulator to say, please, can you clarify in the context of this, issue, how this is going to, be implemented? And there is that conversation, back and forth. So pending when the regulations will be, reviewed, those opportunities to interface and engage with the FCCPC will obviously present themselves, and might give some clarity in the short term.
Yes, it will give some clarity in the short term because it's just too broad and has too many another round of loopholes that they have to cover, which is pretty much why this other updated one came in place to do. To touch back to the aspect of small lenders, I can't think about them because one of the value proposition that we brought into the market space was that as we're coming in, if you are a small lender, you don't need to put too much effort into spending money on technology. You can just come in, start your lending business and the rest of them. Now, they didn't have to worry about the cost of technology. They're coming in to plug and play. But it looks like now they have to worry about the cost of regulation. As you're looking at it down the line, do you think this is going to push a lot of them out of the market or not?
It might.
Okay.
For those ones, for those ones that really want to play in that space, they'll probably find ways around it. Look, regulation is not something you have discretion in relation to, right?
Okay.
The regulator comes and says, pursuant to your law, you're required to do this. You either comply or you exit the sector, right? Now, does the cost of compliance impact the ability to do business? Maybe it does, right? Does it help doing business? Maybe not. Can the costs be lower? Yes, the costs can be lower. And then maybe load up the cost on the non-compliance so that it prevents people from, not complying, right, with the regulations. So maybe a way to look at it is maybe the compliance costs can be, reduced, because now, in addition to the FCCPC, right, language under the regulation also states that if you're operating in a regulated sector, you still need to do your compliance with that sector regulator.
Yes.
So you now have additional operating costs, right, which would then be hived under compliance costs. I mean, for people like us, probably gives us opportunity to engage more, and involved. Yeah. Without using I'm very careful with how I'm saying things, because that means that you need people like us to assist you with your compliance, to assist you with your registrations, to guide you along the way, right? But at the same time, I don't think the purpose of regulation should be to drive up operating costs, especially considering the fact that you're operating in a very challenging environment, right? The least that regulations should do is cost of compliance should be low. The purpose is comply. Regulations should not be revenue driven, right? We can load up the cost on the non-compliance. So you don't comply, you pay X amount of money. Yes, understood. Which means I need to comply, right? Otherwise, I have some steep penalties to face and pay. And you have those penalties under the regulations. Apart from the monetary penalties, you're prevented from sitting on as a director in any other entity within that space or sector, right? So I don't think cost of regulations should sort of prevent people from playing, and I think it's going to impact a few lending businesses. But again, the flip side is it throws opportunity out there for collaborations. There are business restructuring opportunities that will present itself. Again, for those that will be taking advantage of those opportunities, or for investors that will be looking to invest in maybe struggling digital lending businesses, they will now be very particular about how they have been in compliance, so that you don't, take on legacy, regulatory issues, that you ordinarily don't want to bug yourself with.
Yes, that's actually true. Even the cost of it, I mean, it's not just FCCPC license you're paying for. Inside the FCCPC, you have to do NDPR, you have to do, so the cost of even getting all of that as well, when you put it in hand, next thing anybody will be asking is that, what is my profit in terms of this lending? And let's not forget that some of these lenders are even taking money for as loans to repay. So they have to factor in the fact that, oh, how much is now going to be my interest that I'm paying for these and the rest of it. So it's quite a lot it's a lot of cost. So quickly, we're just going to go take some Q&A, because I can see a lot of people have dropped Q&A questions here in the question session. So I'm just going to ask you some of the questions. So I have this one. This new regulation obviously protects the borrower. How does it protect the lenders? For instance, is there any regulation or policy from FCCPC that helps to ensure these customers don't default? Example, ensuring clean credit report mandates before getting documentations from government agency, etc.
I mean, yes, it's heavily skewed in favor of the consumer, and that's given the history within the space that even brought up all of these regulations and guidelines in the first place. But I think there are opportunities and I think there are protections as well for lenders. Apart from the obvious one, which is if you comply, you're fine. We're not going to come after you with penalties and all of those. Credit assessment is one, right? Do your credit assessment. Even before the regulations came on board, you're required to you're supposed to do your credit assessments. Assess the customer. Find out if the person can actually, pay or not. Now, I understand that the credit bureau space is still sort of developing. Maybe some lenders are not using them as they should. And again, there are, data sharing issues, which the regulations have come to, gaps, which the regulations have come to plug. So share data, for the purpose of, credit reporting and assessment, so that, subsequently, when you're then assessing a customer or a borrower, you're better able to place them where, they're supposed to be. And then it goes to, how you then factor the loans and the repayment for that loan that borrower would, be able to pay. So you don't give a customer loans that the customer will not be able to repay. Again, that sort of reduces or minimizes the, loan default statistics, right?
Okay.
And there's a bottom line, advantage for the lender, right? So those are some of the things that I see really. It may not be, as overt in terms of how the regulations protect the customers, but yes, if the regulations provide a blueprint for lenders on how they can carry out the lending business, which, I mean, if you implement, will result in some upside on your bottom line.
Sure. Thank you so much for that instance. I hope you've gotten the answer to your question. You can drop another. So there's another question. It says, Mr. Goke mentioned the regulation covers entities that benefit from any form of digital lending. Will it also cover third-party providers in open banking sectors that will help lending companies access a customer financial data domiciled with the customer's bank?
The answer to that question is as long as there is a linkage, right, in your fees or any benefits you're deriving from the services you're providing to a lender, if it ties to the transaction at hand, what the regulation says is you're covered, right? And I sort of touched on that earlier on in the course of the webinar. I think, and that's my own opinion, that particular provision needs to be clarified, because you don't want to cast a web that is too wide, which on one hand would impact the ability of the FCCPC to be able to ensure implementation, but on the other hand, is the intention to cover everybody. So you're a vendor, a vendor can be, I mean, it's very loose. The vendor is a service provider and I'm getting the benefits, right? Please, can you define what benefits will look like in this situation, so that we sort of limit those that clearly will come within, the ambit of the regulation for the purpose of, registration with the FCCPC.
Thank you so much for that. We have so many questions pouring in. I'll try as much as possible to cover all of them before our due time. So for the question, does it also affect traditional lenders that accept properties as securities?
I don't think it does, because the regulation talks explicitly about unsecured loans and barter exchange, cash, data, advance, and all those sort of things. But largely, it's for unsecured loans. I don't think it would impact traditional lenders.
Okay. Do you mean that if I get licensed today, I do not have to renew until 3 years? The clause around this is confusing, and I would like some clarification.
So once you register, your license or your registration expires on the 31st December of the 3rd anniversary, which means 3 years, right? And then you can renew for an additional 3 years, but subject to the payment of an annual levy. So it's a 3 year license and registration period.
3 year registration. Okay. I have one that asks whether MFI operating as a subsidiary of a commercial bank, does it apply to them, which you've also covered as well. And yes, it does. As long as you are doing digital and unsecured loans, this also applies to you. I have for background checks, companies that provide checks for this lender, should they also be registered with FCCPC, or just a matter of compliance required that the customers that are lenders should provide FCCPC evidence of registration with FCCPC?
Well, the way the regulations is currently drafted, the safe answer will be to register. But I would also say maybe before you register, right? Maybe engage with the FCCPC. This is how I am playing within this space. This is what I am doing, right? And this is how I get paid for what I am doing. Please clarify, am I required to register? As long as there's a linkage, like Ella mentioned, with respect to benefits derived from the transaction, it would appear that you're ordinarily required to register with the FCCPC. But I would say, please, by all means, engage with the regulator to confirm if or not you're required to register. Because once you register, you bring yourself within the purview of the regulator, and all of the compliance requirements under the regulations should apply to you. So question is, should I register in the first place? If there is some gray area, or or you think, well, given the arrangement that I have with the lender, I don't think I should be covered, then engage with the commission. I'm sure they'll be more than happy to provide that clarification.
For you.
And that's what I'm going to do.
Thank you so much for that feedback. Another one that speaks to clarify if traditional lenders that involve in manual lending without web app and internet will still have to register for the license.
I don't think they will be required to register for the license. So if you are digital, if you are not digital, you're not online, you're not on the web. If you're traditional, I don't think you're required to register. Again, it's flowing from how the regulations have been drafted. Those that are required to register have been clearly stated as those sort of people who are digital, or electronic, or online, or non-traditional. Those are the guys. Those are the guys that are required to be registered. Maybe if you then say if you were a money lender, right, and you are not digital, you're not online, right, you're not electronic in your lending activities, it's a gray area, and I would say, look, I don't think the regulations will cover you, because the regulations is clear that it's for digital electronic, online, and non-traditional. I mean, money lenders have been around for a while. I don't think they will be covered given the language and the regulations for those kind of guys. For those that are digital, electronic, or online, web-based, whatever it is, digital, I mean, you come within that scope. Then obviously with your, collaborators, partners, service providers, vendors, you'll be required to register.
Thank you so much for that. So we have a question that is asking how much is online lending license and what's the process of getting it? What's the minimum capital base for digital lending? Please, for this person, you can help shoot an email for us to guide you on that. The minimum amount for online lending license, it depends on which state you want to be licensed, whether it is legal state, whether you're going to a Ogun state. It depends on which state and the amount varies. But just shoot us an email on sales@lendsqr.com and we would have someone reach out to you to guide you on that. And I still have one person that said that they did not get the explanation of the traditional lenders. Yeah, and that was our final question.
The regulation says non-traditional lenders will be required to register. There is no definition for non-traditional lenders. Again, another area that I think the FCCPC will need, to clarify. What we would probably think traditional lenders will be those that are not, if you're not digital, if you're not electronic, you're not online, you're not web-based, you provide lending activities the way we know, lending activities was being provided before digital lending became a thing. That's how I will frame traditional lending. As long as you don't come within digital, electronic, online, web-based as a lender, I will generally categorize you as a traditional lender. And for that purpose, the regulation is clear. It's for these people if you're not in the category of these people. But you're also not a service provider to a digital lender, an electronic lender, an online lender, or you're not a collaborator to them, then you're not required to.
Okay, thank you so much. So hi, Goke, this has been an interesting session, and hopefully we're able to cover everybody's question. And I want to say a big thank you from all our lenders and all the Lendians. That's we from Lendsqr. Really appreciate you taking out this time to come and speak with us and speak with our customers. As usual, we like to start on time and end on time. So I want to say thank you so much. And for anybody that would want to have a one-on-one conversation, we will send out different materials in the line. You can drop your questions and the rest of it, and then we can always shoot it out to Goke to provide answers to all of this one. Thank you so much. We appreciate the time, and thank you everyone that came out. Do enjoy the rest of your day, and yeah, thank you everybody. Thank you so much.
Thank you, Grace. Thanks everyone. It's been nice being here. Good day.
Thank you. All right, good day. Bye.